Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the Nasdaq100 futures chart. Just before I start today's video, anyone who would like to receive my trading signals, then please scan this QR code on your screen where you can sign up for a very small fee of $29.99. Let's start though. Looking at the Nasdaq100, we're trading just above 12,000. We all know in the past couple of trading sessions, we have seen a pullback. We've seen those bond yields rise significantly, and we've seen a massive shift in investor sentiment with regards to interest rates. We had that PPI reading last week, which came in a lot hotter than expected. And initially, investors were expecting a 0.25 basis point hike in March, and that has now gone to the expectations that it could potentially be a 0.5 basis point hike. Hence, that's why we've seen the 10-year yield now rise significantly, as well as the 2-year bond. So that has caused some weakness in the Nasdaq 100. But the good news is that we have found support here. And we still have plenty of support underneath us. We have the 0.23 fib area, we have the 200-day EMA, and we're both 50-day moving average and 50-day EMA as well. So we have plenty of support just below us, and I do believe that this is an area where we will find support. I've said in previous trading sessions that we've just finished this huge ABC correction phase, and now typically what happens is that we get this this 5-wave Elliott wave structure. So this could just be the 1 to 2 wave, and then we could potentially see this second to third wave, and then we could see the rest of this Elliott wave structure play out throughout the rest of 2023. So I do believe this is just a corrective a corrective move here. It's nothing meaningful, and we will see buyers step back in. So I see this as a buyable dip, and I think it's only a matter of time now until we do trade back up towards the 0.382 fib area. All it takes, guys, is a slightly positive amount of economic data to come out, and you will see that shift in sentiment from investors go back from 0.5 basis point hike in March to 0.25 basis points. Just one bit of positive economic data. We have a highly sensitive market at this moment in time in both directions. When we get the good news, then of course the market rallies probably a little bit too much, like we've seen back in January and February, and then vice versa. When we get some negative economic data like we did last week with the PPI reading, we see that overreaction towards the downside, and eventually it's just a matter of finding the balance between the two.